Yeah, there you go, Chair.
All right, thank you. Right, so we're now back live. Thank you very much for everyone. Sorry we had to go out into exempt for a bit. Have I got anyone wishes to speak to the paper in general or raise any points or any debating points that aren't in 1, 2A or 2B? I've got no one indicating. Therefore, I just need someone to move a recommendation that we note the paper.
Recommendation moved.
That was Pauline. Thank you very much. Seconded.
Second, Councillor Gandon.
Okay, thank you very much. Again, I'm assuming the default position is that we all agree with that. So only type into the chat if you want to abstain or you want to vote against. I'm getting no one typing anything, so that is passed unanimously. Thank you very much. If we can now move to item 14, investment performance and strategy monitoring for periods ending 31 December 2021. And can I ask Nathan Rowlandson to present the report?
Yeah, thanks, Chair. So the report's for noting. I'm not intending to go through exempt Appendix 1 unless there are questions, of course. And exempt Appendix 1 is the portfolio monitoring report. There are no material concerns with the portfolios from either a returns or an operational perspective at this stage. And Mercer are on hand to provide commentary around the strategic performance as part of their paper at Appendix 2. Just before they do, you'll note there is a Mercer research paper on Ukraine and Russia at Appendix 3. And I know there's going to be a discussion on Russia and the potential kind of impact to the portfolio in a closed session after this meeting, but it is worth noting that a statement was issued on the website regarding the fund's joint approach with Brunel on the treatment of Russian assets. And at the time the statement was issued, fund exposure amounted to about £230,000. Based on the latest available data, that exposure has since reduced to around 135,000 or 0.002% of fund assets through a combination of a decline in asset values and selling activity by underlying managers. From a portfolio performance perspective, all remaining direct Russian assets have been marked to 0 and have live sell orders in place. Brunel are now engaging with non-Russian companies who derive a material portion of revenues from the region and will be feeding back in due course through our client group. Finally, you'll recall that we undertook an RI member survey at the back end of last year to canvass member views and opinions, which we're going to be using to feed into the Brunel climate stocktake, which is currently underway. Responses to the survey were largely supportive of our existing approach to RI, specifically around the importance of integrating ESG in investment decision-making, the long-term financial risk posed by climate change, and the importance of engaging with companies and policymakers. We've actually already used the results of the survey to produce some member-focused content, which is in the process of being distributed across various comms channels, including the website, newsletters, and social media. So happy to kind of take any questions or hear any comments before handing over to Mercer to cover off Appendix 2. Thank you.
So can I just remind people, if they wish to ask questions about Appendix 1, we will have to go into exempt session again. So have I got any questions before we go back to Mercer? I've got no one typing in anything or waving at me. So Nathan, can we proceed to the next part, please?
Yeah, sure. Nick Page is here from Mercer in place of Steve Turner, so I'll pass over to you, Nick, if that's okay.
That's great. Yep. Thank you, Nathan. Good afternoon, everyone. As sort of Nathan went through before, I'm not going to spend sort of too much time on the performance to the end of December. As you can appreciate, there's been sort of a lot that's gone on since year end. That as we move into the next part of the meeting, we can discuss that in a lot more detail. having said that, I just sort of set the scene to where we were at the end of December. So even though Q4 was actually a particularly tricky sort of quarter with sort of global supply chains were stretched. They had the emergence of Omicron as well during that quarter. The funding position held up pretty well, and asset growth sort of outweighed sort of the rise in liabilities over the period, and the funding position was around 102% at the end of December. Now, what's happened since then? So the start of the quarter was very much sort of continues sort of worries around supply chains, had inflation increases, and sort of the sort of cost of living crisis really sort of coming to the fore, driven predominantly due to the rising in sort of energy prices and knock-on impact that has on sort of inflation. And then clearly once the conflict in Ukraine started, that exacerbated some of those issues that sort of we had been seeing at the start of this quarter. So where things stand sort of mid-March or so, from a funding level perspective, expecting a fall of around sort of 4 or 5% from where we were at the end of December. Now, from a sort of asset performance perspective, equity markets are sort of down, but maybe not as down as they were a few weeks ago. There has been some recovery in the last couple of weeks. So the US market less impacted relative to the Eurozone. European equities seem to have taken more of the brunt as I guess fears on the reliance on sort of key commodities coming out of Russia. And UK markets actually up around 1% over the year, predominantly due to kind of a windfall from the fact that there are higher energy prices, and there is a slight bias in FTSE 100 companies to sort of gas and oil and mining. So the main story isn't necessarily around asset prices, it is more around inflation. And as even though the UK itself doesn't rely on sort of Russian sort of oil and gas, it is still purchaser on sort of the global market. And to the extent that supply from Russia decreases for whatever reason, sanctions or otherwise, that just puts prices up, and we've all seen sort of the prices of petrol and diesel on the forecourts, and that'll further become sort of entrench the cost of living crisis, which may even get worse once the sort of energy price cap is revised again, sort of come October time. And we'll talk a lot more in sort of the exempt session on sort of actions and on what we're going to sort of be looking at. Just to cover off so the performance report to the end of December, before I take some questions. During the quarter to December, the fund transferred holdings from low carbon equity to the Brunel passive Paris aligned equity fund, and also completed the termination of the emerging markets equity with the distributions going into the high alpha and sustainable equity fund. So I mean, given those changes and what we've seen in terms of equity markets coming out of emerging market equity at that point in time, seem to have been timed well. Yeah, in terms of the sort of liability hedging, equity options, and the wider risk management framework, sort of everything sort of performing in line with expectations as well. And collateral position was very healthy at that point too. So I'll sort of pause there and sort of take questions. Although, as I say, we can get into it in a little bit more detail during.
I've got no one indicating they've got any points they wish to raise or questions to ask. I'll give you a few more seconds to type in. I've still got no one typing in. So can I have someone move that we note that and someone second it?
Happy to move that we don't, Chair.
Second, Chair. Second.
Okay, I'm going to the vote again, and can I'll assume that we're all in favour of it. So if you're not in favour, please write abstain or against in the chat. I'm getting no one typing in, so I'm assuming that is unanimous. Thank you very much. Can I thank all members of the public who have been watching. Thank you for your attendance and your interest in the Avon Pension Fund. I'm afraid we are now going into a private discussion, so we will have to exclude you from the next bit. But the formal meeting and the agenda has been completed. Thank you very much.